Wadau. Hey, ha. I think tumecheza hapa kidogo. Tumecheza hapa kidogo na gold. Imetucheza kidogo tu, imetulenga kidogo tu. Imetupiga chenga. Imetupiga chenga nyamani. Gold katupiga chenga. Gold imetupiga chenga hapa jamani. Angalia hiyo. Gold imetupiga chenga hapa. Yeah, that will not work. How are you doing? Good afternoon. Good afternoon. It is 3:14 p.m. It is 3:14 p.m. How are you doing? It is 3:14. Bwana, nilikuwa nishaingia vitu zingine hapa nikingoja ngoja ishuke alafu tuingie nayo. Nayo. Wapi. Now, you see the reason I was telling you that there was a complications here. And I think some of these things might have changed. That's what I'm looking here. This move. So we are going to reanalyze this and see where we are actually going to move, because already gold may surpass this level. Gold has already surpassed 1592, around at 5,104. So we are going to check again and see where do we have, because I think today and no entry. Today I don't have any entry, so I'm going to look for one right now. If not currencies, then we're going to move with the gold. Keep tuned. This is amazing. This is great. The time is almost there. The time is almost like Caribbean news, almost the news time, and I think we're ending to this place. Today is Wednesday, so on average our learning is coming. NFP the same time, so it's really going to be very much interesting, and I think that is going to be the next 1 hour. So in the next hour, 1 hour, vitu itachemka hapa, mambo itachemka hapa vibaya sana. I'm just sharing the link so that at least we can get some more people before we proceed. So if you're joining this, ensure that you like, and I have something to share really right now. You can see I don't have an entry. Let me display my entries, because they're right side here, so that is where I place my entries on those levels that we have. Oh my lord. Lindsay, you're saying that you see still the setup is going to work after the news. Probably, yeah, maybe, yeah, it can actually work. But actually, we are violating this. The only thing that we're violating is these candles to close above here. So when you see the market actually closing right here, these candles becomes perfect. Unless when let's see whether we have all these candle actually on just 1 hour time frame. 4 hour time frame checking on this, unless now the market reverses of this and breaks this down. But this part here already broken, because checking that on the highest time frame, you can see still the area is broken and the market is up. When you check that clearly, you think the market is already up and that area has a little bit broken out. Yeah, so there's a small sell that I was talking about USD JPY, when we were saying that the prices were really on this zone. You remember this area here, buying to the top here, because of I actually demonstrated this using the RSI, that is relative strength index, and the price is still trying to move from this down level. So you remember that, and the prices are really going to move, let's say even at least to maybe 40 or 30. They sent out the call of this, which is absolutely 50. So around 50, that is what to be having here. Before now, the prices actually presumes to move to this spot, but at least make sure that when you see 154, you avoid that market, because I was talking about the traders, scalpers. That is the move that you see there. So it's just a combination of a lot of things in the market, combination of different. Are you ready for the NFP? That is what I'm asking. Are you ready for NFP? NFP is coming up. NFP is coming. NFP is here. NFP. I think there are some people who have never traded NFP, and I think it's going to be crazy. And I think we might be checking that together with our honey. The reason we are getting NFP this late, most of the time we don't get it on the 11th of February. We could have gotten this around the 3 or 2, the Friday of the 2. The other thing is that we don't get NFP at the middle of the week, most of the time Friday. So the Friday is when we get the NFP. So this happened because of one thing, that is the shutdown that happened, I think 2 weeks ago from the US, and these end to be carried on to this week that we have here, and that's why you see it is really happening. And that's why you see now we have the hourly earnings plus the NFP at this junction here. I want to us to check where is the market going to be moving, and specifically we'll be going to, I'm going to open several charts here, and so that we can analyze this news that we're getting here. And I want you to, once you watch this, then I think it's really going to be amazing, because this is going to be super. I want us to not actually anticipate something from this market when it comes now to the NFP and the hourly earning that you're going to have. This is really going to change how you see things. So I see. Now, how many are here? Now we just want to start now to see what we have from this news. This is really important. I want us to see what predictions do we have for the NFP. Carlos, welcome. Dichu Kena, welcome live in it. Thank you so much. Welcome here. Now, I want to talk about this. This is very simple, but it's simple just like that. And I want us to see where this market actually may be leading things, because most of the time we may not really understand what all this is about. But this is just very simple. Now, you see this information that we have here. I want to expand this, and I want to for everyone to see. That's too much. Yeah, that's better, right? That's better. What is an hourly earning? Average hourly earning before even we talk about non-farm employment change, because I think this is not that good, but it's not really a useless data, but it moves the market so nicely. But let's talk about this. The one that you see on the screen. What is this? First of all, if you are new to this, you can do one thing. You can actually even you can zoom, like you can just go something like that, and then you click this button that we have here, and it will explain all these, where it is from and all those kinds, but I'm not really focused on this. It's actually carried out by the Bureau of Labor Statistics. All right, and one thing that you really have to know, most important thing about the inflation on how the country is doing, but I'll be showing you this. Let me even write a book here. I want to write something. I want to show you something. Oh my goodness, how do I do this? Let me have a whiteboard here. I want us to see whether we can know what we can expect from this market when it comes to the movement of these prices nicely. Now, hourly earnings. You know, this is different. So this is specifically from the US. Number one, that is what you have to know. This is basically from the US. Like the US, you know, there's difference between, let's start here. Now, the hourly earning that you see on the screen. Hourly, then earnings. The one that you see on the screen. So this is different from what you normally get in our country. Number one, here is the different. When you talk about our countries, we talk about the salary, right? We talk about the salary most of the time. Why? Because people work from 8, let's say even from 8 to 5 p.m. That you work from 8 a.m. all the way to 5 p.m. Okay? This is the hours that we normally work. And you see, this is the kind of people that we call the job. This is the job. Okay, this is a job that you have. But when it comes to US, these guys are different because they work in hours, and that's why you hear so many people come here. Like you have your friends who are from Kenya, and they are visiting the US, and you hear them talking about, I work 6 hours, or I work 3 hours a day and get paid 3 hours a day. I work 10 hours a day. I work all those hours per day. So that is basically simple. In the US, most people get paid to work in these days. So it's not just the same as how we do it in our country, like how we do work from 8 to 9. So theirs is actually different. They just work in hours, and that is simple. Allow me to remove ants so that I see many ants appearing. We are going to do this until we see what we are going to expect from this market. Now we are in the microeconomics. We are in the macros economic, in economic now. That is why known as the economic calendar here. It's known as the economic calendar. So if you're enjoying this, ensure that you like, and that is the most important thing. First of all, I'm doing this from your bitterness. You can see even I'm turning hands, so that means zero revenue when I'm live streaming. But this is fun anyway. So that's why you have to subscribe at least, you're pushing us. Now, this is what we are talking about. This is the things that you really not avoid. Like if you are a beginner, you can of course access it from the trading view. It is right here from Forex Factory. And this is the data that you're going to get. First of all, even before we speak just of that, you can see, for example, on the last time that you got this, once you get negative, of course, that means it's lower than that, and of course it's going to weaken. So this is a direct impact to the dollar prices on how the dollar is really going to be reacting. So that means once we get higher than predicted, of course it is positive towards the dollar. So for example, you can see here, this was expectation, and I think it was about 0.3. Can you see it? Can you see this? So that is what you just get. So this is, for example, I'm just giving an examples here. So you see this is 0.2 and this is 0.3. So a positive data here means strength to the dollar. This is 0.4, expected it to drop to 0.3. We got 0.1. That is weakness to the dollar. So red is weakness to the dollar, then green is positive to the dollar. That is just simple. But what is this average hourly earnings that we really have here? Is just very simple when it comes to now these ones. Now the hourly earnings is the way I just placed it here. In our country, we normally work in salaries, and you see people working for 8 to 5 p.m. and then get the salaries probably at the end of the month. In US, they work in hours, and that's why you see it is instead of now salary talking us about the salary, we are now talking about average hourly earning, like average of how people are really earning on this. So this is hourly, and that's what you see now. We talk about the hourly. So here now the most important thing here is to note is that we are talking about what? We are talking about earnings. What people are putting in the pocket. Is it increasing or reducing? Is it increasing or reducing? So this is the earnings, okay, the one that you're going to get right now. So is the earning going to increase or reduce? That matters, because this is why you see some of these earning actually affecting the dollar. When people have a large amount of money, this is why it is affecting the dollar here. When people have big money, like people have money, everyone has money, the money is plenty, people are getting paid from their job, all right? People get paid from their job. That means they have money. These guys have a lot of money. Of course, what this does to the economy is that it pushes what we call the inflation, which is the CPI. The CPI is Consumer Price Index. This is actually, you can just say it's the CPI, it's the inflation. And what is inflation? Inflation is where the price of commodities, for example, I bought this microphone here, 20,000, but the same microphone you buy it 2030 at 50 or maybe 50,000, from 20 to 50. That is buying the same product but at the highest cost, and that's why you see the CPI. So when people have money, they normally compete for goods like that's available in the market, and that you see now this is really going to be happening here. So they go and compete for available product, which is now causing the CPI. So for example, if it is brand, the brand is going at $50, but because people have money, they are really spending on this, and this will cause the sellers and everybody actually to just put the prices higher. And when the government actually realizes this, and we are talking about the Fed and those guys that deal with, or the central bank that deal with the monetary policies, that is to control the value of that currency. If they are going to do what? They are going to increase the interest rate. That means the cost of borrowing money. They are going to find a way to take money from you. They are going to find a way to put and remove money from you, and that means that is to try a way to strengthen that currency. And that's why you see now that is the genesis of everything here. When we have people earning, these are people earnings, it's very mini. And now the people, because all people, you assume your friend has money, the other person has money, your mother has money, everyone has money, everybody can afford a car. You see, that is not a positive thing. Actually, it's a negative thing towards the economy. Yeah. So you think when people have money is a good thing. Like when people get a lot of money, is a really bad thing to the economy. Go to Zimbabwe. Zimbabwe, I think a piece of a brand is actually going at 1 billion. one piece of brand like this in Zimbabwe is 1 billion. $1 billion of Zimbabwean dollars. That is inflation. That is really bad to the economy. People have money, and you see, yes, you are someone, your social has 1 million, your friends has 20 million. That's a very bad thing towards the economy, and that's why you see this matters. This matters here. This matters, and that's why you see now this average hourly earning that we're going to be waiting here is actually a very good determinant of the economy, like of what we're anticipating to get from the market, like how the future, because this is not the end of it. This is just a look, it is a leading indicator. When you look at this, it will tell you that it is a leading indicator of a consumer inflation. When businesses pay more for labor, the higher costs are usually passed on to the consumers. All right, so these are costs. These are what we are really talking about. These are really what we are talking about. Now we are going to talk even about the data. That is just in general. We are going to talk about what causes this before the time. In the next hour, we are going to, you'll never skip this hourly earning again. Average hourly again. That is really going to be your favorite. It's going to be your favorite, and you actually be knowing what to do with it. Simple. Now you understand what it means. It means the amount of money people are putting in and how dangerous it is for all people to have money in the economy. Like, it is very dangerous when people, all your friends and everyone has money. Right? Because it causes what? Consumer, it increases CPI. Right? Now, on Friday, we are going to have, we are still on this, we are still starting, we are just starting. That is an introduction for this. On Friday at exactly 4:30, we are getting the CPI here, okay, and it is expected to be at 0.3%. Now, which is the leading indicator here? The leading indicator number one of it is this is an average hourly earning. We are going to use that to determine the average hourly earning you're going to be getting from the market. What is really going to happen? Like, what is it? What is that? And that is really good. That is really interesting on this. So, average hourly earnings. What it causes this? This is very important. This is very important. Now, before now we move to the hourly earnings, what can cause the prices or the people their income to increase? What can cause these people's, because we need to know. Yes, we have this. How can we know that this is going to increase here? It's going to be positive and it's going to be causing the market? Because there are some people who gamble with this. You can't gamble with this. Actually, you can use the previous data to know what is going to be happening here. And that is actually the leading indicators that you're going to have. Now, what can cause this to increase? And we are going to see what happened. The previous data we got for this. What do we expect here? Because we are going to see a high volatility, and this is going to cause the market to move to one of this direction. Either it's the gold is going to sell or buy, but we are going to see what we are going to be waiting to see from this market. It's indeed going to be very amazing, right? So let's start with this. Now, when you talk about the hourly earnings, when you talk about these hourly earnings, number one, we are going to see the number one indicator for this is actually known as I'm going to explain it. It's very simple. The number one leading indicator for US for hourly earnings. So I'm going to put hourly earning here. Okay, hourly earnings, it is here, the one that you're going to get in the next few minutes, right? Less than an hour now. Okay, it's here. So this causes what? This is a leading indicator that gives us the CPI. Okay, now before this, there's what gives us this, because of course once we get this clearly high, of course going to predict the CPI of what we can get on Friday. Now what can lead to this? Number one, we have the GL, or I don't know whether it is just written like that, JOLTS. Okay, this is US job opening, and so many people don't know actually what this is, but actually it's a leading indicator towards the early earnings. There are several things that causes this. There are several things that causes this for us to have this kind of data here. There are several of them that causes us to have this kind of data, right? But we are just checking one by one. We are checking one by one. We are checking one by one. Now, what is the GOLTSA? The job opening, this is simple. I want you to listen to me carefully. It's just very simple. GOLTS, this is just a job opening. I'll give you assignment to just go and look for the full meaning. It is job opening and labor, something like that. Go and look for that. You're just going to just get it. Now, this job opening, it means one thing. It means how companies are looking for the people, the opportunities. We can actually call these opportunities. This is opportunities that we are waiting to see from the market, the opportunities that are appearing, the way companies are actually looking for the employment, right? So this is the labor. People are looking, companies are looking for labor. Simple. That is simple. Companies are just looking for labor. That's how you just have to understand this. So you just know one thing. If many companies are writing the GOLTS, that job opening is very big, that means many companies are actually looking for the people to employ. And this is really amazing. Like in the US, companies are looking for workers. Companies are really looking for workers. It's just simple like that. Simple like that. Many companies are looking for many workers there. That is GOLT. How does it cause the hourly earnings? This is another simple thing that we are going to look here. How does it cause this hourly earnings? Now, you see, when several companies here, they are looking when they are looking for labor work, when they're looking for labor, what normally happens is, the company, let me even give the example with many campuses as we have in Kenya. Safaricom is looking for many workers. Airtel is looking for many workers. E-company as Smith is looking for workers. This Baburi Cement, probably all these big companies that we have in Kenya. Bidco, all these big companies, even the foreign industry companies, they are looking for workers. And the workers are not really available. So what is going to happen here? What is going to happen here? For a company that is going to survive here, for it to get more workers, you have to use one thing. You have to use one thing, and that is to increase what? So when this increases, so when the GOLT increases, when the job opening increases, when the companies actually increases the demand for the labor, what happens to the salary? What happens to the salary? What happens to the salary for the hourly earnings? What happens to the salary? What happens to the salary? Someone on the chat, what happens to the salary if the companies are competing for available labor or work. And there are several companies looking for people to hire, and it's really increasing in numbers. What are they going to do with the salaries of these people? Are they going to increase the salary or increase the salary? Because the competition and available work is really not that much. What do you think these people are really going to do? What do you think hourly earning is going to do here? What do you think is going to happen with hourly earnings? Yeah, I repeat again. What do you think the hourly earning is going to do when the GOLT is increasing? Because companies are competing for available job opportunities that they are there on the market, right? What is going to happen on the hourly earnings? So what they are going to do is very simple. They are going to increase the hourly earnings is actually going to increase because these people are really competing for the workers. So they are going to bid, like for example, you see someone is advertising a job and they say, come, we just give you the job. The other one is come, we have job opportunities. Come, we have the job opportunities. Of course, when we have something like that, what happens to the workers is that they start demanding for higher salaries. They start demanding for high pays. And of course, also the companies can raise the pays in order to get the workers. You understand? Because the company needs to produce. So that is what they are going to do. So most of the time, when you go to the calendar and see the GOLTS, that's the job opening, becoming too high, that means that month the company there was so much vacant for the jobs, opportunities, and many companies were really struggling to get these guys, like the competition that was there. So the competition to get something makes the ask price actually to go, I don't know whether it calls ask price or the price to go higher, because also when it comes to the demand, people demand the salaries, can demand higher pays, and also the people who are putting, the companies that are putting money, they actually put even more money to that. So when now it comes to the hourly earning that we are going to get today, number one of the indicators that are very important here, number one of things that are very important here is what? Job opening. And we are going to check it and see what did we get from this, because this is not just one of the indicators. So remember now, but sometimes when there's shutdown, these things get mixed up. Like sometimes you're not going to get that accurate information. Now we need to look at the GOLT, all right, the recent one that we had, because this is for the last month. Okay, this is the data for the last month. So we need to look at the GOLT and see that one. That is for US. So we are going to type here GOLTS, and then we search this one, and then this is what we get. Okay, we need to get this is actually for, we got this on February 5, and this, if this is for February 5, then that means it's for there. I think around December, January there. Yes. Now let's see. Can you use this indicator to determine or see the future of what we will get from, of what we expect from this market? So this data was released on Thursday of this what is released on the 5th of February this month. And what do you see from this? Right, so it is leaded to delayed by 2 days due to the US government shutdown. So this was delayed 2 days ago. All right, that is what. Now look at this. It is released 35 days, so that means it is 30 days. That is means that is that month. All right, that is that month. So this is, we're looking for the data of January there. All right, so we are going also to see the CPI how it's going to appear, and also the hourly earnings, how they went, because this can actually predict on how, at least this is just a leading indicator towards that one. Now the GOLTS, job opening, what do we really have here? This one, The previous one, I think that is for December, but remember we entered shutdown, I think around November. This one, that was released on January, it was actually, we entered data here 6.93. That's the previous one. The forecast tended to move up, but it's actually moved all the way to 6 point to 6.54. So that is actually very low. That's low. That's very low, but still you can see 6.5 million is very also a big data here. It's really a big data here, but normally it causes this. Now if this reduced, of course we said it is directly proportional to, so the GOLT, that is what I want you to give you, because we're going to look at least for 3 indicators or 4 indicators towards the hourly earnings and see in depth what causes this. All right, now GOLT, that is job opening, is directly proportional to HE, which is hourly, to the hourly earnings. All right, that is what we have. So GOLT is directly proportional, JOLTS is directly proportional to the hourly earnings. So I don't like drawing with my mouse, I like drawing with my pen, but just since I'm using different pointers and they are not touch, then we just have to do it like that. So what do we expect here? Hourly earnings, we expecting loan data. Probably it's either going to 0.3 or 0.2 to be low. So that is according to what we get from GOLTS. And what does this mean? It means, what does this mean? It means, look at this on now. If we get, let me just repeat again, you see what we were talking about, the hourly earnings. So if hourly earning increases, it is strengthened there. The dollar, why? Because it is directly proportional. So also this is a directly proportional to CPI, to increase the CPI. So CPI again is directly proportional to the interest rate. So we can say interest rate, RLIR, so is equal to interest rate. That means that is how now the cycle is. Like we are here now. We are here now. We are waiting for the CPI. And all this market moving down and down, we're getting the currency weakening, dollar strength and all that. It's weakening because of the projection for these hourly earnings to cause all the way, not even the CPI, actually to cause all the way the interest rate decision that can actually be made here. Do we get this? Yeah, so that is simple. So that is simple. So the job opening that we got for the month of January, it was around 6.5, 4 million. Is still higher. I think it is still high, but still low compared to the data that we've been getting. Is really moving down. You can see 8 million, 7.6 million, but this is really low. So what do you expect to happen to these prices here? Of course, it's not really 100%, but I want us to look at these indicators that can link all these hourly earnings to be like this, all right? And now you see, we can now expect low data on this because this is directly proportional to this. So when we have low job opening, of course, the salaries may remain the same. Companies may not that compete for the workers, you understand, because it's not really that high. So it's either they are going to maintain the salary, and when this actually drops so much, they can just decide even to reduce the salary. But most of the time you get it's actually going to remain the same. So that is what we have now. That is where we are here now, the 0 point. Either we get the same 0.3 or 0.2 that is predicted to happen, that the predictions are really expectant from this market, because we now got the previous month, the GOLTS, the job opening at the low. That is just one indicator. We are going to look at three indicators, and number one of the indicator, the GLCS, has shown us that we are going to get a negative data towards this, and how it's going to cause the price of dollar to weaken. What's going to happen to the prices of gold? Buy, right? And the price will move up. And that is why, there's some people really don't understand these things. That is, people, market moves prior to the prices. And that's why you see the price of USDJPY moved from this level here all the way to the top. The market actually bought. When you moved the prices of the gold, the same, although the price is now has just reversed here, we got a breakout. The market trying to move at the top here. And that is the weakening of the dollar. And that is the people actually now predicting, this breakout that we got here. Do you see this? The breakout that we got from this place here? That is a breakout that we got, and the market went all the way up here. That is what traders normally do. Like when they see the market is down and you get such indicators, then of course they trend real, like before even the market opens, and you think things are really crazy. That's why sometimes when we have high impact news, number one, some people avoid to trend at that time, because people can really trend towards this data, and it's really crazy on what can really happen to the market. So we don't blame ourselves. It is news day, and when we have such news, of course, sometimes they can defy technicals when we have them, right? So I saw this, and that's why, today I did not have entries, and that's why I was really waiting to see if that is really going to happen. But you saw what just happened here. People are really trending the news, and the news always moves the market. That is the one of the information that you really don't have to ignore. Is this becoming very hard and we have not started? That is just one indicator. We are just starting. We are just starting because we have 30 minutes. We are just starting, right? So we are moving to the next indicator, because I need at least three leading indicators towards this data that we have here. William Mendia is saying that kindly explain the CPI. Worry not, I have already explained the CPI. It's just very simple. But don't worry, we'll be here to explain everything. It's just a cycle of, it's not just a cycle that causes the other. All right. So, like with the way we have seen, what causes another, what brings another. GLT causes HE causes CPI, CPI causes interest rate decisions. Simple. Okay, that is just one of the lead indicators that we have. My lord, was that easy, simple, or what do you think? Because we have not checked on retail sales, and we are going to move to the next. So we have already checked that one. So Mark, I want you to write that down, because I'm also going to write it down. That is how I analyze this. So the GLT last month was low, suggesting that the hourly earnings actually might be dropping. So I'm going to write it around here, so that at least you can have something solid. This guy, stop. Can you stop? Can you stop commenting nonsense here? So you're going to move to the next one. So you see, sometimes about the news is about not gambling. You need to be very smart. So you're going to move the next one, and I'm going to write it down here. So this is the next indicator, and I'm going to check it here. I know sometimes these things might feel very boring, but you have to really check them. And number two is known as unemployment. I have written them down. Unemployment. So let me just read like that. I will just mention it many times. I'm using the mouse to really type this. Let's talk about the unemployment and causing the. It's just the same idea. It's just the same idea. You understand? Eh? Unemployment and that causing what? Unemployment and the unemployment causing what we are going to get from HE, the hourly earning. What is the relationship between hourly earnings and unemployment rate? Unemployment rate. What is the relationship between unemployment rate and the hourly earnings? So this is just very simple because these now are leading indicators and these data are released before even we get the hourly earnings. So those are some of the indicators that you can just be looking at. And what you just have to look is how is the unemployment sector. It's just very simple. It's just very simple like this. Let me just put it down in a very simple way. Number one, I'm working in a company. I'm working in a company, and the company I'm working with, we realize that the unemployment is really decreasing. Right? Right? Unemployment is decreasing. Like that means when you go outside, I'm using Safaricom here because we all know Safaricom. Maybe even whether you're in Nigeria or the other country. So in our country, there's a company known as Safaricom, a telecommunication company. So about Safaricom, let's say Safaricom, you realize that there are workers already that are working there. And then unemployment, what happens is we realize that the data for unemployment is really going down. Like you see, the unemployment data is going down. So this is another indicator here. That's number two apart from this. So this was number one. So this is number two. All these are leading indicators. Understand that. Now, on this unemployment, we noticed that the company that we realized that general like unemployment is reducing in the country. Sahii unaweza kuwa na maringo like you can just have pride now to go and ask even for more salary, like the salary can actually be increased because you know there's no more people to employ, like they are not useless people now. Sometimes when there is high unemployment, when there is high unemployment rate, sometimes your boss is really going to be very rude. He tells you, you know what, you want to quit, you want more salary, just resign, you know or maybe you're fired, because he knows actually going to get someone else from Gikomba or somewhere and get someone who is interested. He'll tell you, you know what, there are so many people who are interested in this job. There are so many people who are interested in this job, so if you don't want it, just go home. You understand that language, yeah? But what if when actually the unemployment rate is really very low? Like, not so many people, the employment sector is high, right? Then of course that of course salary can increase because companies want to maintain the available money workers available, and that is simple. So you can combine these indicators to get the early earnings. And for example, I want to search here unemployment rate and unemployment rate in the US, and I want us to check the data that we got here. Sometimes I know this data went to for this is January 9. I think the next one that we are getting, let's see, I think it's being released next. I think this is for January. I want us to look for this. It is why is it? Actually, it comes here. I don't know what we got for the January. This is expected. Why is it on Wednesday? I think this will be using it next month. We'll be using it next month. The shutdown, I think, meant all these things to that is the shutdown. So sometimes when we have the shutdown, the data is really delayed. It's as supposed to. You can see it is already delayed by 5 days, and we are getting it also Yeah, today I think it's still going. We're getting it here. So on this we can choose or check the employment sector. So let's see the other data here, which is search for the event. Let's look for claims. There's different. There's something I want to check here. Let me allow me 1 minute. I want to combine it with another indicator here. So this is actually found. Let's now proceed on this. So we can use an employment claim now. Let's use an employment claim in this sector because I think that some data were really released just on there. So this was on February. This is on February 5th of February. Yeah? This was on 5th of February. And what do you see here? What do you see here? What do you see here from this? What do you see here? Do you see something? This is 5th. Eh? This is 5th, around February. There's, although this is just released, not the same as the rate, but still we can use this data when we go back. When we back on this, let's see. I want to look on the unemployment change Wednesday, or maybe let's just go to this one. Let's go to this one. Yes, so look at that. So these are actually, all these are indicators for the January. But the last one actually we got it being low. All these are really positive. Specifically for January 8, we're looking for January date 8, 198, 200, 207. Right, so this is January 29, but when it comes to action data for this, on the some weeks, the end of the week, we got 231. So this is actually different from the rate, because you can see on January alone we got around 4. So this is released weekly. That's why I wanted to check more on the rate. That is why I wanted to check more on the rate around this area here. But at least we got 200 on that one. So does this really support what we got from Zoo or LTS? Let's say this is neutral, because yeah, so you see now how the government shutdown normally makes these things confusing sometimes. depression does all those sort of things, and this is crazy. Maybe we'll be using it to the NFP, using it to the NFP. We use this to the NFP because as well we can talk of hourly earnings and then forget about the NFP, but of course NFP is on the other side. Yeah, so the past, at least this had been increasing and we're getting mixed reactions, because at least the last week was really the 209. This was really negative and the market just moved down. So I'll just put this neutral, so I'll not use this, but maybe when you go to the NFP, might just consider that. So that's just one indicator that was correct here. So I want to see another one. I want us to move to the next one. I wanted to check on the retail sales. Also, retail sales sometimes can be a leading indicator, although it's not a really strong one. It can actually be, and this is how it can just affect. Remember, we're just checking all the indicators to just combine at least 4 of them to see what we can get from the hourly earnings. So, you remember we got the retail sales. All right. So retail sales, that's how you just analyze these things. You can actually do them within some few minutes and then you are done. Once you just get it, I'm just explaining it so that you can just understand on what you're doing. So remember the retail sales. When do we have the retail sales? It was actually this week. It was actually this week that we got the retail sales. We have here on Tuesday 10. Is it this week or last week? Because today is on 11th, so it's yesterday, day 10, when we actually having this. Actually, this is an indicator towards the data that I'm going to be receiving here, specifically average hourly earnings, and this is very important. This is really important here, and you can see actually it went all the way to 0.00, right? So now this is simple. I'm putting this in a very simple way. The way I'm just explaining this, at least everybody can just get, or now you can just analyze and know the direction towards what you can get on the hourly earning. Now, how does the retail sales that we didn't get here can be a leading indicator towards the average hourly earnings that we got? That is just like the salaries, right? Assume now, I'm giving you an example again, and I'm going to use Safaricom all the way to the end. Unless maybe you give me your company name, I'm going to use it. All right. I'm not paid by Safaricom though, but assume this. Assume now the Safaricom meant a very big sales, like last year. When you see the profit margin is really very big, like they are making money. Sales are really good. The money is really good. When it comes to the pocket, they have money. These guys have money. The retail says like they have sold so well. That translates to just one thing. Do you think the company will actually increase the wages? Do you think they are going to increase the wages when they have meant when the retail sales is low or when the retail sales is high? So when is it likely for them to increase the salaries for the employees or the wages or hourly earnings? When is this best time to increase that? It's just very simple, and I know you already know that in your heart. You already know that. Of course, if I have a company and I mean bigger sales, bigger profit, of course, what I'm going to do to my employees to appreciate them, I can increase. So the increasing their wages is actually, it's not an issue. It's not an issue to me. It's not an issue. What if the last year the sales were really very bad? Of course, you know what it's going to do. You're going to concentrate on the next month how you're going to improve that. And when you hear about the salary, mtu anakuambia boss, tuongezee mshahara, unaambiwa unajua wewe kampani imeporomoka, hakuna pesa, there's no money. People have been employed, they know that. You know your bosses, how they tell you things are not really good in the company. So it's just simple like that. It's just simple like that. Of course, there's likelihood for hourly earnings to increase when there's higher retail sales. Hmm? When there is higher retail sales, specifically for this month to month. This is called month to month, COMM. This is month to month, and we're going to check on this. So this is it. So this one, all these to call all this, and you can see last month was really very bad. 0.0 from a prediction of 0.6, and this is indeed so very bad of 0.00. So likelihood mambo ya salary tutaiongelelea wapi the next time, si sahi, not this time but next time. So these are another predictions that indeed the retail sales is what's now the correlationship. Retail sales increases, of course our earnings as I likelihood of increasing. So it is directly proportional to what we're getting here. So how do we, this is called what? Is this a gamma or alpha? I don't know these things, but I normally put this when we are saying directly proportional to. Colors ako wapi? Colors, hebu nikumbushe hizi vitu. Remind me these things. What do we call this? Is it a gamma or someone just on the chat? What is this? When I say retail sales is directly, I normally draw this, but I remember using it in high school of this kind. So how do we know navigate on this? Because now we have seen the retail sales actually been very down. So of course, retail sales expected to be low as well. 0 point is expected also to move down, and you can see now the expectation now is 0, like I mean neutral, right? That is another leading indicator, perfect one. Retail sales, simple. How would you translate it? You can have actually like 10 of them just combining. At least this is giving. We need at least 3 to prove us that we are going to get this data correct, so that at least we know what I'm going to get here, and then we move to the NFP. The time is moving very fast, then I have to move quickly before the time. We are moving quickly here. We are moving quickly here. So what does that this mean? Retail sales is down, and before this. Now, what do we expect? We can expect low data here of average annual learning. Of course, we're going to check on the NFP, but I don't think whether we have more leading indicators to on the NFP, but I'll be checking more of that. Now, if we have the low hourly earnings, that means CPI is not a problem, because people are really not earning that much. And of course, you know, weak dollar. So this will translate to weak dollar, all right? Weak dollar. So what does this mean? That means I'm expecting the dollar to drop. That is what I mean. And if we're trading gold, expecting a sell, expecting a buy. That's why you see sometimes people might actually buy prior to that. That's what you see gold pumping all the way to 5,000 and something. And if you're trading, this is actually different. If you're trading Euro USD, what do you expect? Up. If you're trading USD, JPY, down. All right. So that's how I'm expecting now from this market in terms of this. We are going to check just one, and then we are going to look on the NFP, what is it, and how you can just use it. And that is really going to be interesting. Which one is the best to really check on this? Because NDP, private payrolls, that is released really 2 days before the, yeah. Like this actually have to prove itself before even we just use it. There is other terms. There is also another microeconomics reasoning that we can actually use from the company level, that is from the manufacturing side, like PMI. we can go to the purchasing managers index, but this is really going to be deep, and I don't think we can actually cover this before the data is actually released. So we have all these leading indicators, we have all of them, but they're just, we can actually use that those two, but maybe next time we actually have to come back here live and just at least do 5 leading indicators. That's the next one we are going to do on the CPI. So on the CPI, we are going to have 5 leading indicators to know where we can actually move or what we're going to expect on the CPI, right? Now let's move to the NFP. What is the NFP and what you can be expecting on the NFP? Because these 3 data that we see here, that we see here is actually going to move the market. All this that you see here. Also, the unemployment rate is really going to be very important. But because we have discussed this hourly earnings, of course, what do you expect from this place? What do you expect from this? What do you expect from unemployment rate? So it's simple. You can just check something here. It's already late. Do it to the government shutdown. Of course, just already late. And actual forecast is good less. Of course, when we have less unemployment rate, that's good for the currency because we have few people who are actually unemployed, and we can check that from unemployment claims how it's actually been moving, like how it has actually been moving. But based on what you have been getting, like on employment claims here, let me just give it to you. The time is moving fast. I need to reason here very fast. Now I want us to look this. So we cannot actually look on unemployment. So checking on the unemployment rate, because this is the next one that is actually going to move. You can see the time has started and clocking here. We have this, it actually next like unemployment rate. What is the leading indicators towards the unemployment claims? I'm going to look for just one indicator here because of the time. And number one, we are going to look on unemployment claims. What has been happening? It's not actually about the last week. We are going to check on at least previous some week of what has actually been happening, because unemployment claims normally is counted weekly. Like we are going to see 4 of them in that week. What has really been happening to that, and that is what you're going to be getting here. So when we use unemployment claims here, for example, I search the event unemployment claims, you are going to see that in the past January, we're going to actually concentrate more on the January. Let's see about the January, what has been happening. You can see January 8th, almost from December all the way, it's actually been up. Positive, 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 positive. Unemployment claim has actually been very high. So these are people who are claiming to be unemployed, right? Data is really up here. We are receiving high data here, because once this is just like this, of course, so many people are claiming an US unemployment. Is this high or this is more as expected? So this is 215, it became low. This is 200, expecting 213, became low, which is positive, became low, which is positive. All these lower data of unemployment claims that we have been getting for the month of January. Now, what do we expect from the one that is really coming up today? Because what we've been getting from January is the unemployment claims has been reducing, all that. So you see, now you have to do this prayer to this, because oof. Okay, thank you so much. You're saying alpha sign. Yeah, it's alpha. It's actually direct sign to show it's directly proportional to that. Now, what do you mean that this data has actually been increasing or decreasing? Like the unemployment claims has actually been increasing, decreasing. So what do we have now for unemployment rate? And that's where you have to be very sharp here. Unemployment rate has actually been increasing. So maybe when we're expecting a negative here, 4 point something here, but this is actually going to be positive. So you just observe that. But NFP, I don't think whether we have time to check on the NFP, but I think NFP does not really non-farm employment change, because here we are talking about the government side, and this is different. So when you go to this, you actually to check on the NNGs, because there's different. This is really crazy here. So you see, now we have a lot of things to learn from these sectors here, and I think next time we are going to have more time. Let's now have a setup and try to see where the market actually might be moving from this area here, considering now that we might be getting a weakening dollar. That is what we got from the market, and what we have here. I want to be very ready for this in case anything just happens to this market. I'm ready for this. I'm ready for this. So let me set my account. I need to be ready for this. There are lots of things anyway, but I think we have not really predicted 100% on this, because there are several data that we have to check on this, and I think we needed more information. Like, we needed more of this. So I'm going to be a little bit, because we have not checked on the NFP, but I want to see what we expect here, because sometimes we can expect crazy results. Some people are going to trend based on the NFP. How many minutes do we have? 4 minutes. Yes, I can check on the NFP. So the previous data is expecting to be good for the currency. So 66. Hey, my friend, 66. This is crazy. This is high. We may be getting it. So this is going to fight the hourly earnings here. He's going to get it here. So can you really expect a negative like 50, 59? Of course. So I'm going now. I don't really like this, but of course we could have traded in the morning, where we could have placed. This is crazy. This is crazy. News trading is crazy, but we have not really analyzed 100% on how, the market to move on this. So I'm risking $500 on this move. I'm risking $500 on the move for this. Just small, and make sure that you're very careful on what we are doing here. I'm going to put it here. But of course, just note that this is not really going to. I'm going to place the stop loss here. So we are just going to wait until maybe 1 minute to the time. Sometimes some brokers may not allow you to do that. Hey, I'm not really. Hey, my God. Okay, let's just wait for it. So please don't really advise many people to trade news, because it requires professionalism to just do this, and sometimes if you're not serious enough, they're going to wipe your account. So I'm going to find the entry here. I'm going to be showing you my entry, and so I'm going to just very small lot size here, very very small lot size here, absolutely just very small, very small, very small here, because of how the market actually can just react to this. And I'm going to use, my account is very big, so I'm going to use let me use 0.1. I'm going to use 0.1, and yeah, I'm going to use 0.1 seconds. Now I'm in. I'm going to place the entry. I'm in, so I'm going to show you right there. And of course, the reason I'm putting that is in case we move down, because sometimes the market moves to sweep liquidity. So that is manipulation that normally happens in the Forex market. The market can really move down, so to sweep liquidity that is down, that is to wipe people who are really down. And then, of course, once it swipes that one, then it continues to move on the upper side. That is crazy. That is what normally happens to the market. So let's see. I'm expecting the gold to weaken on this, although we have not checked several things here. But crazy, we lost it. My goodness. Oof. Jesus. What did they miss here? What do we get? Jesus. Yeah. Positive retail sales. Oh my god. Oh, 130 very positive data that we got from this market. Jesus of Nazareth. Jesus of Nazareth. Oh, lo, 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 lo. Hey, I'll see what we missed here. Hey, look at that. Let's see. Someone told me that we might be heading to the place where we were to buy from. Let's see if that is going to be of an advantage. We are going to see it right now. Yes, I want to see. Oh, we may not be coming to this area, so the reaction is here. So I'm going to reverse with it. Oh, that was very quick. That was very quick. Oh, I told you I fear these things sometime. Okay. Now that is to sweep the liquidity. I think that is the people who might have placed their stop losses here, and I think the market have reversed towards our technicals here around this area here. Look at that line. Look at this point. This line here is actually becoming stronger than even we expected. It's becoming very strong. So my entry point is 81. So once we hit 81 or 80, that is $40 below. That is 81. Yeah. So once the market just designed to hit that, I think I'm done with that. Hey, so many people swiped out there. Ooh, that is crazy things with the news now. Jesus, 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 Jesus. Oh, 43. Yeah, but that candle is really very large. I think that candle is very large. And why did I not place the stop? But even if I had placed the stop loss here, remember what could have happened? The market could have actually swiped this out because of sometimes it can actually sweep all your stop losses before now the market proceeds to move up. That is what can basically happen sometimes to the market. That is sometimes what can really happen to the market right there. Yeah, so no problem, we just wait and give time. Now let's see, I want to see what we got here as we just wait for this amazing market that is moving here. The NFE, we don't check it well, but I'm surprised by this 0.0 0.4 0.4 0.4 0.4. When did it come? Retail sales is really down and this is really down. Unemployment rate, why have we not gotten this data here? I want to refresh. Yeah, 4.3. This is positive, huh? This is positive. I think that is why we got a very big candle to move this market, is because of that. 130. 130. This is crazy. I think this is a very big gap. We need now to improve more on this. I think we have to be checking these data before the time, like 5 indicators before the time, so that we cannot mess up. We need 5 more indicators. Yeah, I wish now we had started earlier to analyze this on this data for five indicators. What has failed us? The GOLTS. Okay, no problem, no problem, no problem. We just wait for it. I think once this market have touched this region, I don't think maybe we are going to go back to this area again. I don't think whether we are going to move up. I don't think we are going to move down again. The region that we are waiting to see here, I think now because of this, we could have moved to this place of 48.78, the place that we are waiting for this morning to see these areas here. Now we might actually be changing that because I think the market has now changed what we were expecting from that area here. I think we are now changing, unless now the market keeps dipping, because this really candle is big. And I'm going to partially close some of the, let me close the half, a half of the position that is around negative 200, right? I'm going to close a half. Market execution 0.05. You know, see the problem. 0. Let's see how the USD has reacted. Let's see how the USD has reacted. What's our is the reaction for USD Oh, 154.3. I think we already touched this area that you are talking about, the upper side. We already touched this, and I think the market now is trying now to come back after that to zone. So in case maybe you end your unders around this, I think the market actually might continue to move down all the way to the top. You see now sometimes the technicals can actually override. Sometimes technicals can actually give us the accuracy. Like this is what we got. See this region here, and once we touch this, now we are going to be very observant, because once this market, this is what we analyzed this morning, like these prices can now touch this and move all the way down, maybe to 150. The JPY is actually also gaining the strength, but you now know the data that we got right now is the one that is overwhelming the dollar right now, the JPY right now, because of the strength for what we link out. In the next like 1 hour, we're going to, the stock market is really going to open in a very big way because of the data that we really got there. I think we're going to receive very big volatility, high volatility. Just prepare for that on the Nasdaq, and as well on US that. I think the volatility is really even going to be more on that, right? Now, gold prices might still coming back, and I think we are still low on this because of this line. You see this line now, the prices, I think now, because of that, I think because of testing this point, this small line that we enter on morning, the morning, we might actually be moving it all the way to the top. That's why I was saying maybe there's likelihood we're not really going to maybe come back again to this, but at least the US economy is actually reporting so good report here. That's a good report for the US dollar that has actually been losing it for the past few months, with the Trump crying. I think Trump was saying he's depressed. I don't know how many check that one. Trump is depressed. Actually, the money can't buy happiness. Have you seen what the Elon Musk was saying? The money can't buy happiness. It's true. Sometimes money cannot buy happiness. Now look at that. This is trend that has moved all the currencies. This one, this is for you. This one is for DXY. This movement that you get here. See this move here. That is what we got from that place. All right, so we just try again CPI. I think with that now clear data of the retail sales of our average hourly earning increasing. Now, of course, now it's be more easier now to get the CPI on Friday. So we are going to start, make sure that you are here early, actually before, let's say even 3, so that at least we can have good hours of analyzing this market so well. Like we're going to have good time of analyzing deeply on the CPI and get on what is really happening. The USD JPY is really down after touching this. You can see now what is happening here. The gold is really back again. Yes. Let me see where my Nini is. 85. So it's really back. Look at that, 62 USDJPY. Where is it? Look at that crazy move there. Look at that crazy move of the USDJPY. Yeah, so expectations, and that is what we really get here. So if this is your first time we meet again tomorrow, we really missed that one. So around $200 gone, my lord, my lord. Trading news is really tricky, and of course that is a risk that we normally expect sometimes. Very small risk, of course. I can't use eye losses, especially on this. So that is, of course, expectations for the market. When you get into such things, you of course expect such result. All right. Where was this place here? I want to see this 154.6. Did we really achieve this level here? Because I meant at 153.6. I see it. 5065. Now that is what we have. So, oh my lord, allow me not to relax, and then tomorrow again we will be here back again to really analyze the market again on news, economic news. This really surprised us. So the next that we have is Thursday GDP, that is for GBP, but on Friday, that is the most important part, where we have unemployment claims and also the CPI. CPI is actually even more, I think, even compared to what we really got here. So CPI is bigger, is really. So 130 employers 100, and that is amazing. That is amazing strength. Non-farm employment change. This is amazing. All this actually is just good because it's going to give us the CPI on what we really expect. And this actually might trigger the CPI that actually to be up. This actually might trigger the CPI to be up because number one, the hourly earnings. So there's someone who was asking me about the CPI. This average hourly earning is up. Employment rate, unemployment rate has really reduced. That means people now are employed. And non-farm payrolls is actually increasing. That means people now in the US have money. And this might push the CPI to be up. That's what we see now. It's actually caused the strength. So again, tomorrow on Friday, we might be expecting even the CPI. You can see it is expected to be 2.7. Maybe we're going to get either 2.5 or 2.6 higher than expected. And that is going to be amazing. So thank you so much for this. If this is the first time to join here, make sure that you subscribe. Follow me on TikTok, Dan Orex. If this is your first time to be here, make sure that you subscribe and turn on notification bell, because tomorrow again, 11 a.m. East African time, we'll be here to reanalyze the market, analyze again, and trend. And that is what we normally do, right? So this is just, when I analyze the market, I need to enter something like that. Our analysis is really based on strict rules. So make sure that you join us every single day from 11 a.m. East African time. If you have not subscribed, ensure that you do so and turn on notification bell. It's still going to be very important, and we are going to learn a lot from this, right? Thank you so much, and have a good day, good trending week. We are still in the middle of week. A lot of things are really going to be happening. Make sure that you check on my TikTok. That's where I normally throw like fast reactions and what is really trending to things that can really affect your trading journey, right? I see you then. Adios. Adios. Dun, 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 dun.